Good morning. Welcome, everybody, to another market open. Today is July 5th, 2023, 9:21 a.m., and it is now time to get back into the markets. We had a little day where it was closed. The market got to take its day off, but we're back, and it's time to get back into stocks. Let me just tweet this out right now. Live. It's time to open up the stock market once again. I missed the stock market. I did get some necessary, rest from stocks yesterday, but it's not like I wanted it. So we are back. Carlos, Steven, Joseph, Invisible Voices, John Smith, Felicia, Jager Float, Victor Hernandez, Kane, Jude Jr., Benny. Missed you yesterday, Benny. I missed you more than you could imagine, brother. Iceman, JJ, thank you all for being here. Drew, Cameron, Gail, Thomas. All right, here we go. We got a market. We got a show to do. We got stocks to discuss. Lots going on. So let me open up some of the charts in the pre-market. Now we're red in the pre. Broccoli Bob, Bay Ray, Seth, Edmund, how are you guys? Thank you for being here. We are red in the pre-market. Why are we red in the pre-market? Well, your guess is as good as mine. We are going to get minutes today by the Fed, the Federal Reserve. So the Fed did their meetings, their FOMC meetings, June 13th and June 14th. That ultimately decided the rate pause versus the rate hike. So that was one of the deciding factors. Those meetings were some of the deciding factors on getting to a decision. And we're going to be getting the actual notes from the meeting at 2 p.m. Those notes are actually going to be very consequential on what happens with equities today. If the market feels like those notes are important, if the market feels like if the market feels like those notes are extra hawkish, they confirm the 2 hikes, all that stuff, even though they already should because they said they were going to do that stuff, then we might see a little bit of a down run in stocks, or there might be something positive in there that suggests that Powell is more dovish than we suspected, and we can get a little bit of decline. It just tends to happen like that always when we get the minutes. So we'll see if there's anything substantial there. Tesla right now, 278 pre-market, so really not down too much from 279 on its ending price on Monday. Robinhood it's at 1072 pre-market. It's up just a little bit. Bitcoin is at 30,287. So Bitcoin, we saw a nice little decline from 31.3 to 32.87. Wasn't sure what the reason for the decline was, but it was a little bit more volatile as we get into the market open. S&P down just a little bit. Nvidia's down just a little bit. Palantir's down at 1540, down from 1552. SoFi's down at 850 from 852. So there's red. Even Apple at 191, but there's not a massive amount of red. Usually when there is this type of red, though, when we open the market, it will be a little red, and then the market decides either do we continue to give a dip or do we buy up the little dip that is there. And so that's what we're going to see from what happens in the market. Are you pumped the market is opening in after 48 hours? Yes. It was sad with the market not being open. It's something about the market not being open where I stayed up till like 5 a.m. last night doing work and getting stuff done. And so I've been very ready for this moment because it's time to open the market, bro. It's time to open the market. Amit, you got any sleep, bro? My NY, the fireworks from Saturday through yesterday's day. Yeah, the fireworks were bad. Where I live, it's more of a suburb, so the fireworks they stopped by like 11:30, so I didn't have to deal with too much of the fireworks. But yeah, the fireworks weren't too crazy. I didn't go to watch any fireworks. To be honest, guys, I've seen fireworks my whole life. July 4th, I just don't care about the fireworks anymore. I really don't care. So I was working last night. Like I was on the live stream, Finance Junkies. I was doing stuff. I was like, I just don't really care about fireworks anymore. Nate, what's up? Tesla Allen Tier, I love that name. What's up? Kimberly Yoon, good morning. You sleep at all? Yeah, I got a little bit of sleep. I slept at like 5 or 6. It was more like 5:37. That's the last number I saw on my phone before I knocked out. And then I'm up here for the morning open. Amid wearing the Madonna gloves. You know what I mean? It's just a little fashion statement. Sometimes we gotta break out the gloves. We gotta show that we're business. And Novix at $18.58 as well. This one we're tracking very deeply. Still doing the due diligence on this one. Do not have a massive position. Let's look at SLG. SLG has just been doing amazing. This is a gem that Steve found, and then ultimately Chris decided to finish some of the DD. We got this one as $19, and now it's at $30.55. It pays a 13% dividend annually. and the assets on book would help you, or under management would help you value this at $65, which is just insane. It's a market cap of $2 billion, assets of $12 billion, short-term debt of $4 billion bucks. I mean, one of the two largest New York City property owners and landlords, essentially. The really good companies are buying commercial real estate from SLG. And it's in New York. It's not San Francisco. It's not Boston. And in New York, there's not as big of a crisis as what's going on around the rest of the world. So SLG is one of those stocks where, whatever I can dump in every month, I just dump into it because it's there's not that big of a bear case after going through it. The bear case is that the properties get foreclosed or that no one's paying rent. And like that bear case has pretty much been solved. So then you've got something that's just been destroyed through the pandemic, and now it's going to slowly recover over the next couple of years. Even if over the next couple of years it's a double with the dividend you're getting and the capital appreciation, SLG is absolutely one of those ones that I want to develop even more of a position. Star Buccaneers, good morning. What's the next position you were looking to initiate? It's not. I guess Enovix adding a little bit to that as I do my DD. SLG putting a little bit more there. Obviously Tesla. If the dip ever comes back, I'll buy a little bit of Tesla. Enphase, obviously. I don't have any more Enphase or Tesla, so probably will need to scoop up a couple shares here and there every month of those two companies. And maybe also Robinhood. I have some options on Robinhood. I want to get like another 24 contracts, which would cost me like another $1,200. So, and that would officially get me at like 100 contracts. So that one might want to do that as well. SLG is the best you can get into when looking into dividend. Yep, I agree. We're going red today. No clue. That's what we're going to see. Now, in terms of, who thinks we're red or who thinks we're not red, Tom Lee has readjusted his price target, and he believes the S&P 500 is going to get to 48.25. 48.25. Piper Sandler says their S&P target is for 32.50 by the end of the year. Obviously, you've got some difference of opinions going on. And it's like, well, someone's going to be right. Someone's going to be wrong. And I am betting my money on Tom Lee. I think all the inflation data is on his side. Truflation is showing how precipitously inflation has come down. I think it's going to be pretty likely that we're going to have a decent rally over the next couple of months. It might not happen, but I don't think 32.50. After we get into the charts, we'll get into one of the bigger bears who at 40.28, he was saying the S&P is ready for a drawdown, and we'll take a look at his thoughts on CNBC and what he thinks now. But yeah, I don't know if it gets to 4,800, but I agree with Tom that I think you will be more bullish than not bearish for the end of the year. What do you think about music vids to Spotify? That's fine. Spotify has to grow in a much more unique way than music videos, because people can go to YouTube for music videos, right? The thing about Spotify and their growth is they have to show profitable growth. The unit economics on their business to me never made any sense. And I've talked with a lot of smart people. Yes, I have an existing audio startup that's in the back, Audia.io, but I've also talked to a lot of smart people. Spotify's unit economics are fucking horrible. It's stupid. Like, anyone paying for that company, I really don't think you've taken a deep dive into their business. They're not profitable, and they can't become profitable because the record labels are down their necks. And they're spending a crap ton of money on exclusive podcasts that don't generate a return. I think the solution to Spotify is you have to build content discovery and get people to feel like, oh, if they post on this platform, they'll find an audience, which is, why Twitter is getting 60,000 new users a day, because people feel, oh, if I post on Twitter, I'll find an audience. I'll be able to build a brand. That doesn't exist on Spotify. And so music videos is not going to enhance that, especially when the only music videos they're going to show are music videos from the record labels, right? So indie music artists, no shot to get discovered. All right, 9:30 a.m., July 5th, 2023. Ladies and gentlemen, the stock market, after a little break, is open. Wake your ass up. Robinhood opens down 0.76% at $10.58. Tesla, $279, holding up phenomenally well. It's barely down. Tesla doing great at $279. The highs were around $282 on Monday, but still doing great. Bitcoin at $30,237. SLG, $30.23. We've got a red market, folks. NVIDIA at $423, down 0.14%. S&P 500 at $442, down 0.34%. Rivian is up 5%. Okay, so the Rivian delivery news has had some hangover onto What's today? Wednesday. So Rivian's doing well. Palantir at 1547. He was down at 1530s. Now it's back at 1540, down a little bit from 1552. So not bad. SoFi 851, pretty much flat. Enphase 169. AMC $4.04. Apple $191, 3.02 trillion lower, as Apple still above the $3 trillion market cap. And you know what? Honestly, let them stay there, because if they stay there, then the rest of the market should be kind of stable given how much of a S&P composure they are. So let them be there. I'm totally fine with that. Snowflake at $174. For those that didn't catch my Snowflake video, the original CEO or the original founder and VC venture capitalist sold $90 million worth of stock of Snowflake. Doesn't look the best, especially when you just signed a partnership with NVIDIA to create generative AI applications for the enterprise, and you acquired a company to help you do that for $150 million, and then you set that. That means there's a lot of growth going forward, like a crap ton of AI fourth industrial revolution growth, and the guy, cuts off 25% of his stake. It's a little concerning, to say the least. Google at $120, McDonald's at $2.95, Unity Software at $43, Space $3.07, Shopify $64, Amazon $130. Amazon got downgraded and upgraded by a couple of their analysts on Monday. So Amazon now at $130. NASDAQ 13,700. Not bad for the NASDAQ. I mean, getting closer to 14,000, which would be new in 2023 and the first time since 2021. Microsoft at 337, Square at 65, PayPal 67, Arc Innovation, I bet it's at 43. Oh, that's not Arc Innovation. I was like, $8. That's not that bad. $44.55. Netflix, look at this, man. I haven't clicked on Netflix, I think, in a couple weeks. Wow. $448. Bill Ackman sold this thing when it was like $360. He had just kept on. Now, maybe, I don't know where he invested, so probably the opportunity cost, he did well taking that money out at the time. But man, talk about 700 top, 150 bottom, right back in the middle at 450. Not bad. Shout out to all the Netflix shareholders. Congrats to you. All right, let's see what we've got. Amid them selling means he's going to invest in more VC opportunities. Got to exit at some point. I agree, but $90 million, bro. Like, there's a difference between, if it sold like 10 million, 20 million, I'll be like, all right, but 90 million, 25% of your stake, that's a lot. He went from 2 million shares to 1.5 million. I mean, and then half of that's going to go to taxes. So it's like 90 million's let's just not be confused. 90 million is a lot of money to dump on shareholders, and you're already paying a 25 times price to sales for a Snowflake at $450 billion, or sorry, not 400, $57 billion. It's just a lot, bro. Stock-based compensation increased 51% to 53% in Q1. I mean, you're paying. I did a video on it. I met a guy who uses Foundry in a public software company, and he was just telling me the difference between Palantir and Snowflake. And he was like, as from an investor's perspective, he was like, I just don't understand why anyone would pay that much money for this type of a company. Like, it's just, it's a lot of money, and Palantir gets a lot of shit for being a little pricey right now. If you're going to say Palantir is expensive, Snowflake is not one you could say is cheap. Palantir now down at 1538. SoFi's down. The market's down, but the market's not crazily down. I mean, even the S&P down a point. Even same thing with Palantir, right? It's down 1%. Nothing too bad. Shopify's doing fine. Amazon's holding up really well. We got to do an episode on Finance Junkies, right? Amazon could be a $10 trillion company. There is a real bull case that Amazon becomes the biggest big tech company in the world, just given how much of a view of the vision they have in the future, how visionary they are. And so we'll probably get to that and see what they can do from there. Already up on my new Leaps. Not bad. New bank, great company. What is up with the gloves? Just either I'm going through a phase, or I'm like, I'm in this kind of Karate Kid mode. Like, it's one or the other. We don't know. Can you see the chat emojis? Yes, I can. Always wonder why they gave us TikTok live. Yeah, I can. All right. So let me open up CNBC. Let's get more of a bearish on what's going on in the market. This is the same guy who said he probably maintains S&P to 3,200. Let's see if he changed his mind or if he has any new thoughts to share.
Jason Trennert, Chairman and CEO of Strategic Research Partners, a Baird company, started coming around a little bit, Jason. Number one, I feel your pain. I understand that things weren't all set up for a big move higher in the NASDAQ. I heard a lot of reasons. We had a guy on say that he didn't really feel like he was wrong being negative on the NASDAQ. He just felt like the strength of his arguments were so good that his clients should respect him for the strength of his arguments, even though he's dead wrong. But now that we've gotten where we are, you can't go bullish now.
No, and I'm not.
And people have been on saying, we may not see, this is just last week, we may not see, or maybe it was Monday, all, running
Right.
together, we may not see a new high out of this trading range, a new all-time high in the S&P for 2 or 3 years from now.
Listen, from a valuation perspective, it's very hard to make the case that you're going to see a new high, and it's frankly very hard to make the case that you should be at the levels that you're seeing right now, especially if you have our economic view. In our shop, we start with kind of a macro view and then move out from there. But listen, AI, and it's a very narrow market, as we know, it's broadening out, but AI has all of the characteristics of something that is a little bit unstoppable right now. It's new, it's very much on the come, very hard to discount it. And so unless it hits, an unmovable object, it's probably moving higher for the time being.
Yeah.
But I have to say, I'm still quite cautious on the economy because the economic indicators that we look at are still very, very troublesome.
By the way, Andrew.
Yeah.
It's not like, we get to bloviate and we don't have to put our money where our mouth. Do you remember I said I would have, if we could buy stocks,
Yes.
if we could, I would have mortgaged my house when Netflix was
I
under
remember
200.
you saying that.
Under two, you don't need to be, if it's
I
700,
would like to
now it's
congratulate you on the
but
call.
now it's 200. It was 700. This guy can't figure that out. Goldman Sachs.
Yo, this is hilarious, bro, because these guys are supposed to be like the true analysts in the mainstream media. And even he's just like, I don't need to be a rocket scientist to know if it goes from 700 to 200, I should buy a little bit of stock. That just lets you know how much of a ultimately like game Wall Street is, right? It's like all this analysis, all this fucking due diligence. Bill Ackman spends like months, like literally months before they decide to initiate a position in a company, if not years. And then they sell out of it as soon as it has another dip. It's like, it's all just psychology at the end of the day.
Sachs pays him hundreds of millions, whatever, hundreds of thousands or millions of dollars. And you can't figure out under 200. Netflix probably was, I don't get it.
Do I get
It's a
credit
humbling
for
business.
Facebook at
Yeah.
all? Because remember, I said
I think
Facebook
you
was
do.
crazy,
I think, yeah,
crazy low.
right. You remember that?
I do, and I remember you. 'cause
remember
I-
I
the
didn't
money
say
you
don't
left on
buy
the table, but now
Facebook. I
it's
never
able to
said don't
invest
buy.
in it.
I don't like Meta.
You always remember your good calls, though.
Yeah,
It's,
right.
the
That's
bad
true.
calls, you tend to
Bad
forget
ones.
about
I
those.
forget the others.
Wow.
Completely.
Yeah.
All right. Well, so let's just get and you haven't missed that much in the S&P. It's not like the Nasdaq.
Well,
You've been
and-
using the Nasdaq.
And I need
32%.
to be fair to myself, and again, in our business, early is a euphemism for wrong, right? But by the same token, I would say the market is still lower than when we got cautious on it, right? Than where it was. It's bounced meaningfully off the bottom, so we missed that move. But I still think the fundamental case for
So what are
being
you doing
bearish
there?
on the economy
Yeah.
is troublesome.
So you waiting in 1 year bills or something?
Exactly. I think discretion is a better part of value with the market where it
Who
is.
said that? A fat drunk named Falstaff.
Oh, that's right. It was one of the great Shakespearean characters
I
of
know.
all time.
I know, but he was,
of course.
He was a coward and a.
Yeah, he was a roustabout. Yeah,
talking
no,
about
but he, it's some genius there. I think,
Just because you're
Shakespeare.
fat and a drunk doesn't mean you can't.
no, of course. I mean, some of my best
Right.
friends.
Yeah,
are that.
exactly. That's where real words of wisdom.
Yeah, exactly. But no, listen, I think if I'm looking at the market, I'm saying the thing that concerns me most about the market in the second half of the year is the fact that you're going to see a significant drain in liquidity. In the first half of the year, ironically, the failure of Silicon Valley Bank and the debt ceiling crisis, ironically, proved to be a boon for liquidity because the Fed increased the size of its balance sheet by $300 billion, and the Treasury Department drew down its general account by about $600 billion. So the irony is those two negative things actually wound up being quite positive in injecting liquidity into the system. In the second half of the year, you're going to have to pull that liquidity out.
Yeah, and
Yeah, see, I don't know if that's enough to have a fully bearish view of the economy. I don't, to say that liquidity is going to have to come down, like we're not already doing massive amounts of quantitative tightening at the tune of like, what, $40 billion a month or something. I think the argument that people will have less discretionary income for student loans, which is one factor, but credit bills getting a little bit more tight for people, and credit debt is reaching a couple trillion or something in America, like 1 point something trillion. That could be an argument. I get the point about liquidity, but I think you have to balance that with the fact that inflation is coming down. And like that's a macro force that cannot be denied because that macro force leads to the Fed cutting rates. And I don't know if they cut this year, but if Fed cuts rates, then we're going to have a crap ton of more liquidity, right? Like it's going to be a really fun time for the market. So I just don't know if that's enough to maintain a bearish view. Now, this guy's been bearish for the entire run up. So at this point, he can't change his narrative. So it's also really important to understand his bias here. Because you can't change the narrative now when the S&P is 440 and since 360 you've been saying it's going down. It's hard, right? And this is why I tend to be a little bit more in the Tom Lee camp in terms of at least the raw data on inflation coming down. That's the only thing a bull in this market needs to be vindicated. Like you get inflation down to 2%, you're going to get the Fed to realize they can't continue to raise rates. And if that's the case, that's going to be good. Tesla hitting 281. So Tesla back to where it was pretty much on Monday. It was at 282. So 281, not bad for Tesla. It's maintaining the premium that it got from delivering 466,000 vehicles. Tattoo Chef filed for bankruptcy. I'm not sure why they're still on the market and they're up 5% today because I felt like they should be delisted by now. But no, the stock's actually moving. So I guess people are speculating on it before it goes bankrupt. Bitcoin down just a little bit. Robinhood down 1053 today. Nvidia 425. S&P 442. Palantir 1550, recovering from 1530. Not bad on Palantir. Enphase downing even lower to 166 now. So this is, I think it was at 159 a week ago, but now it's at 166 down from 170. And Apple continuing to maintain momentum at 192. And Novix trying to break $19 today. And Netflix now at 450. Now, would he actually have mortgaged his house to buy it at 200? No, because look, I think the narrative, you got to remember the narrative on Netflix was that it's a media company disguising itself as a technology conglomerate. And there's no real growth because like there's so much media options. I still think that's the case, by the way. I still don't really think they're a tech company. I still think they're just a media company that has like a technology platform, which matters in regards to content creation, user generated content, all that stuff. The moat of Netflix, though, is that it seems like every streaming platform sucks in comparison to Netflix. And we gave them 2 years to figure out if you could actually compete. None of them have the licensing deals that Netflix has. None of them have the creative studio prowess that Netflix has. None of them have the diversity of audiences that Netflix can attach to. HBO Max is the only one that's up there. And HBO, spends billions making like the Game of Thrones type of series, which at the end of the day, financially just aren't that well to compete against the amount Netflix can put out. So Netflix is a clear winner. It's very obvious. And so it makes sense for things to consolidate into Netflix. Disney over Netflix. Yo. Okay. So I think last week I finally got a chance to watch Avatar 2, Way of the Water. Did you guys like it? Did you guys watch it? I finally got to see it. And it was pretty cool. I'm not going to lie. Now, there were definitely some plots in the storyline that just didn't make any sense. I was just like, all right, that doesn't make any sense. That doesn't make any sense. The visuals were phenomenal, but I was like, a lot of these things are a little confused right now. But overall, still a pretty good movie. So let me know what you guys think and if you thought it was a good movie. All right, let's get into another one of these clips. Let's take a look at that. Let's take a look at this. Let's hear someone talk a little bit more on the long side and being bullish on the markets. I think it's really hard to make a good underwater movie, honestly. Yeah, I saw some of the behind the scenes and they did an amazing job, like with the characters, but it is definitely not the easiest. They set it up for a third movie. Yeah, I didn't like the ending, but I agree they did set it up for a third movie. All right, let's take a look at this.
Stocks in the second half of the year. We're in a bit of an unusual situation. The Fed pausing in a historically quick rate hiking cycle. We have some recession concerns. At the same time, we have the disruption of AI.
I'm not concerned at all. The trend of the market is up. And I think as long as the trend's up, you continue to trade this thing to the long side. Any pullbacks that you get in the market from here forward are a buying opportunity, in our opinion. I think you've got to sort of shut off.
Totally different view from the other guy, right? He's like, if you get a dip, just buy it up and keep riding the momentum.
All this negativity that you hear out there, recession, the Fed, and just trade what actually is happening. What's happening, Frank, is the market's going higher. I think we're in a new bull market. The trend's up. Don't fight the trend. Like you don't fight the Fed, don't fight the trend. But I think that the Fed is starting to slow down. I think they've done their job.
All right, let's not fight the trend. Let's put this all in perspective. If we look at the historical averages, the S&P likely to rise 4% in the second half of the year. That would put it at about 4670 at year end. Levels we haven't seen since all the way back in January of 2022. That's a pretty big jump. We also have the potential for more Fed hikes Right now, looking at the CME FedWatch tool, 86% chance of a quarter-point hike in July, just 3 weeks from now. How does that influence your theory that we're in a new bull market and the stocks have a lot more upside?
Well, like I said, another thing too, Frank. Think about this. You've had a great first half of the year. Think of these fund managers and these hedge fund managers that are behind the curve now that maybe didn't participate in this great upswing that we've had. So they're going to start to chase it the last half of the year. When you look at these great first halves and you look at these great second halves, the reason the second halves are so great is because you got people trying to chase it now. You got FOMO, fear of missing out. So there's going to be a lot of money coming back in. You've got 5.5 trillion in cash. That's an
It's almost like a short squeeze, right? The whole point of a short squeeze is that once the stock keeps going up, you have to cover, which means you have to buy the stock at a higher valuation. If you're shorting it at 11, it goes to 18. You have to buy it at 18, which drives the price only even further. By the end of the year, if some institutional clients feel they have zero exposure to the rising tide of AI and equities in this market, that NVIDIA's growth doesn't seem to be slowing down. Microsoft doesn't seem to be slowing down. For all intended purposes, Palantir doesn't seem to be slowing down. If that's the case, then institutional investors are going to want that exposure, and that will pile on to the market. It will essentially be FOMO at an institutional scale and a retail scale, but institutional will be, much bigger in terms of putting the money into the markets, because towards the end of the year, you want to show some performance for your clients and you want to set yourself up for 2024. And if rates are coming down and inflation is really leveling off to 2% by December, there's not this crazy catalyst in 2024 like there was going into 2022, where you want to protect your clients and make sure they're protected on the downside and they're out of equities. You want to get in for your clients at as cheap as a price as possible, and by then the prices will be even higher.
amazing amount of cash. I don't think I've ever seen that much cash on the sidelines to fuel this thing higher.
So it's just cash on the sidelines. So when you talk about cash on the sidelines, we keep hearing about the market broadening out. Is this cash on the sidelines going into that big tech trade? Are you still confident in that? And I have to ask you again, the possibility of another Fed hike. How does that change that AI mega cap tech trade in your mind?
I don't think that it changes it at all. I think that mega cap AI, I think, is going higher. I think that is the future. I think that there's so much opportunity there, and I think people need to jump on the bandwagon, because I think there's a lot of money that's being missed if you're too afraid to get into this market and this nice uptrend of these great stocks that are doing wonderful things.
All right, so you're still on the bandwagon, but you gave us some other picks. I want to start with one of the picks you gave us in the payment space. Why are you so bullish on payments right now when you're saying all the activities in the mega cap tech trade?
Well, like you just mentioned ago, it is starting to broaden out. But what I like Visa, one of the reasons I do like Visa is because it is breaking out to a new 52-week high. I love 52-week highs. The way stocks doubles is they've got to make a 52-week high the whole way up to double your money. But they just had a couple of acquisitions, which is going to broaden their revenue base. It's going to broaden out their profitability. So and people are spending money. They're swiping the card. It's wonderful.
But Vance, they are spending money, but they're going to run out of money sooner or later. A lot of people are spending, but they're technically spending on credit. I know it's money to a Visa, but it's on credit.
Yeah, well, on credit, but look at this. This economy is doing well. Everybody seems to think that this economy is not doing very well. It's doing great. And I don't think we're going to go into a recession. I really don't. I think that Fed Chair Powell is going to actually sidestep this whole thing. I think that he's raised rates as high as he needs to raise them. I don't think he needs to do another point or two. I think that the markets or the inflation is starting to control itself. I'm bullish. I mean, I'm bullish.
All right.
We got Darth Chris in the chat. He came out like a hawk into the live stream. When CNBC guests come on and be bullish, it's time to worry. Interesting. Look, I mean, Chris has a point. I do think the guy talking on CNBC is making some decent arguments, but it's interesting. Is Christopher Patel a little bullish right now on what we have going into the market? Find out on the next episode of Finance Junkies. My Robinhood options are printing very nicely. Options are so interesting. Robinhood stock is down lower than what it was on fucking wow. Oh my goodness. These are up. All right. I'm officially up 2K. I'm officially up 2K on these Robinhood options. Look at that. $2,096, up 51%. Not bad. These options, Robinhood's price is lower than it was on Friday, but the option price is higher than it was on Friday, or Monday, even though the price is lower. Not bad. I've been pretty transparent with my Robinhood position. So, I mean, it's been on Twitter, so that's why I don't care about saying it, because I've already tweeted a bunch of times. But not bad. I'm not selling. I'm holding this one out. We're not day trading this bad one. We are holding this kid until June 2024, so I can get the 1 year thing. And hopefully Robinhood grows enough by then. Look at that. Not bad. Not bad, little Robinhood. They want you to buy high. Well, that's fair. I mean, that's also another reason. That's fair. I mean, look, of course they want you to buy high, though, because on the institutional side, these guys that go on CNBC to pump, I mean, yeah, their incentive is, hey, let's keep them in, especially if you're an investor that missed out. Like if you didn't get Meta at 88, you got it at like 240. Now you need it to get to like 300 or 350. Now you really want the upside, but you missed it at 88 because you weren't that good of a fund manager, right? Like if you didn't get the like, here's my thing. If you're a hedge fund dude or a money manager, investment guy, and you're not getting the bottom, what the fuck are you getting paid for? Like real, what are you getting paid for? Now, you don't need to get exactly the bottom, but like you need to be in the vicinity of Meta from 88 to 120. If you're not getting it at 88 at 120 and it 3X's on you, where's Meta right now? Where's fucking Meta? Meta's at, let's go to Meta. Like, why are you getting paid? What is your job? If you're not getting Tesla at 100 and you're a money manager, 292. So 292, that is a 231% gain. Not a lot of stocks in like 7 months give you 231%. If you're not getting that as a money manager, so my point is if you got it at 250, 260 because you finally decided it was time to be bullish, Chris has a good point. You're going to go on CNBC and start pumping the crap out of it because now you need your gain. And if you didn't get your gain, then you didn't get your gain. So it makes sense. Not digging the gloves. It looks like you had a Bud Light and about to go get your nails done. What a dichotomy. But yeah, Robinhood is doing nicely. See, and it came right back down. So it went from being up 2,000 to being up 1,000, right? So these options are so volatile, but it's so interesting because the stock is literally down from where it was on Friday. But the options, and this is why it's like, this is why if you ever do options, you just got to get in as early as possible. This is the one thing I'll give myself credit for this year. The one decision I made myself was 3 Fridays ago. I saw Robinhood dip like 7%. I was like, this is stupid. And then I had an overall thesis and I was like, fuck it. Let's put 5K. Let's get some of these options. And I think I got them at hopefully a really, really cheap price. I mean, if it gets lower than that, I'll buy some more. I would love that, but let's see if it gets there. Not bad. Matteo Lungini, market open stream on my birthday. Congrats, man. Happy birthday to you. I know we're going to get dinner soon because I know you messaged me on Twitter. Shout out to Matteo. Happy birthday to him. Hope you have a good one, man. Hope you get some linguine pasta tonight. That's such a bad joke, but have a good job. No, your options have a big ass bid spread right now. That's also true. I mean, that indicates the reason for why the price is up as well. Amit, when it comes to options, there's a lot more to it than gambling and having a bullish thesis on a stock. Look, I agree. I mean, look, I don't disagree. My point is, if you have a bullish thesis on a stock and the asset is undervalued, meaning it has $6.7 billion in cash and it's trading at an $8 billion market cap, and there's a crap ton of momentum going into the next 2 years, that's the thesis part combined with some of the fundamental parts. And then it's just a question of pulling the trigger on the option. So again, obviously options is a hell of a lot more, and I'm by no means an expert, but this entire channel is showing the journey of me learning this stuff, right? And so part of learning is taking a little bit of a risk and seeing what you can do. If I lose 5K, it's not going to kill me. If the 5K, does well, then it's definitely not going to hurt me. And so you take a little bit of a risk, see what happens, especially if we're trying to keep going. Also, Robinhood is a horrible trading platform. I disagree with that, Gregory. That's okay. So it seems like a little bit ideological on that. Robinhood is one of the best trading platforms on the planet. It is an amazing platform. Hood is for 2025, and the strikes are around 15 to 20 bucks. Both of those strikes. In stocks, you have to take some chances, especially how easy these days are to play with options. Yeah, I mean, look, I don't think it's easy to play with options, but I do agree you have to take a chance. Like if you're gonna try to make some money in the markets and you want to diversify just from buying and holding and you want to get into options, you don't need to go YOLO into it. But if you want to learn a little bit more, then you got to take these little 5K bets I don't think are crazy. Now, 10, 20, 30K, yeah, it's like relax, right? Things can go south. But 5K is not crazy, especially if an asset's undervalued. You learn a little bit, you get some research, you understand what you did good on this trade, what you did bad on this trade, and then you're not going to win all of them. But you gotta try. And also, I mean, for me with options, you got to give yourself the leap, right? You got to give yourself 2025 and by next year, 2026, you got to give yourself time. I do not do short term. I cannot control the price in 3 months. Absolutely do not think that I'm qualified to do that. I don't have an understanding of price directionality like that at all. And it will probably take years before I can do that, if ever. So definitely long-term options always to get there. Okay. What else do we have? I don't trust the Robinhood platform CEO. I'm curious why you trust his unproven unethical track record. I don't think he's unethical. I mean, like, I think taking away the buy button or sell button, whatever, is not unethical to me. I just fundamentally don't care about that. I care about the business, and the business is 3 cents away from GAAP profitability, and it's trading at basically cash on hand. So that's what I care about it. What do you think about PayPal? Feels super less valuable. Let's go to PayPal right now, actually. Yeah, you know, you're right. I think PayPal is incredibly undervalued. I was talking to a friend in our DMs, and he was basically saying, look, if the thing doesn't even grow over the next couple of years, it's still going to return in terms of capital appreciation because of how much it has been beaten up. PayPal has a moat, and their moat is primarily payments internationally and the network they've created underneath that in terms of direct to consumer, merchants, B2B payments, B2C payments. And like, it's hard to manufacture that, right? You don't go to a website and you check out with Cash App or check out with SoFi or anything like, right? Like, PayPal is the thing. It is that fintech. Even if it's not innovating as much anymore, because quite frankly, you know, there is not that much innovation to do on PayPal. It's an old business. It's been steady for a long time and it's not growing. It's gotten down to some ridiculous levels at $67. And so what is the range for it? The Bank of America report I was reading was at around $90. That is the upside they see to PayPal right now. So it could be a nice ride to 90 in the bull market, but it might take some time. It might not be as quick as people think it's going to be. It might not be a Meta 88 to 240 and like, that was like 6 months. I don't know if PayPal does that. I think if PayPal gets to 90, it might take a little bit of time to get there, but you never know in the bull market. You know, things could get screwy, and then, you know, the retail gets in and they're like, oh my goodness, why is PayPal $67? And it just gets eaten up completely. I haven't seen institutional guys get excited about PayPal. I think a lot of institutional guys were excited about Meta. Meta now $6 away from touching 300, and that'll bring it close to around a $765 billion market cap when that happens. Robinhood is garbage. Thinkorswim, Interactive Brokers, E-Trade. You can't do real research on Robinhood. You don't need to do research on Robinhood. You just need to buy the stock. Like, the research, I don't care where you do the research. I just care about that payment for order flow, baby. That's what I care about. And Robinhood, look, it's the most consumer-friendly application on the planet. When the bull market happens, when the Dumb Money movie comes out and not hundreds of millions, but at least tens of millions of people watch that movie, they're going to download some Robinhood and they're going to buy some stocks. And when inflation goes down and Jerome cuts rates, they're going to use Robinhood to keep buying some stocks. And I think Robinhood will have a nice little... Also on the technicals. I mean, I'm not a technical guy, but the amount of people on technicals on Twitter talking about Robinhood and just showing how like it's ready to burst. I don't know if they're right or wrong about that, but there's a lot of them saying it. Maybe on a technical side, it has some momentum as well. PayPal also steals your money. Wow, you like unethical companies. Exactly, right? That's the argument. Jeremy has PayPal as one of his main targets. Yeah, Jeremy is bag holding PayPal though. So, you know, I think he's correct on it, but he has been bag holding it for a while. So, I mean, I don't even know if he's going to make money on it. I know he might break even on it given how much he's DCA'd. But Jeremy definitely is a big fan of PayPal. I mean, I think he's been a fan of PayPal since like 200. So, end phase now. What do we got? 166, SoFi at 844, Palantir at 1530. That's a relatively red day. Nothing super green, nothing super red. I mean, there is red, but it's not that dramatic. Tesla doing well at 281, Meta doing well at 294. Look at big tech. I mean, big tech's just doing amazing. Amazon at 130. Where's Microsoft? Microsoft's down just a little bit today, but still, Microsoft at 338. It's up now. If Q2, here's my final thoughts today. If Q2 goes against what most bearish analysts are considering, and we have good earnings, it's going to be a fun market because Q3 is not going to be bad. Holiday season is not going to be bad. Inflation coming down to not going to be bad. If we just get through Q2 and we survive with decent earnings, the show goes on. Like, the bull market continues. Meta's got to show some really bad declining ad revenues. Google's got to show declining ad revenues. Microsoft's got to show less cloud computing growth. Like, there's got to be a lot of factors for the market to be like, we're not going to buy the stock of these companies that Microsoft says is a $500 billion in sales company in 2030. Google is estimated to do $796 billion in revenue by 2030. I mean, like, these are big opportunities that you probably want to be in a bull market, and I don't think the market necessarily takes them down. Where are the Qs right now? Where are the Qs? Qs are at 370. Look at that. The high on the Qs was 420 back in 2022. So Qs are at 370. The triple Qs are just regular Qs. They're up. They were at 260 6 months ago. Wow. So if we just do some math, 370 minus 260 divided by 260, They're 42%. The S&P is up 16%. The Qs are 42%. So the Qs are almost 2.5x the S&P. And what are the Qs? They're all tech companies. So big, if that's not proof that big tech is leading the rally, that's it. The Qs are up 42%. The S&P is up 16% year to date, over the 1 year. And seems like big tech has led the rally. Wow. Interesting. Maybe you have any knowledge on VFC? You kids still buying Vans, Timberlands, and or North Face? I actually don't know anything about VFC. It's funny. My cousin the other day asked me about Vans, and I was like, I haven't wore Vans in like 10 years, but yeah, they're comfortable shoes. So she bought some Vans. I literally wear these all day. That's it. And these, how they look kind of nice? My mom just bought me a new pair. And I was like, Mom, I don't need a pair, because she bought me a pair in July last year after I was using some other slippers that I had not given up for like 2 years. And I was like, Mom, I'm just going to, wear those slippers forever. And she forced me to get a new pair in July. And now the old version of these are still fine. And she bought me another pair of these because she's like, you need to wear a new pair. So this is all I wear. And this is like a new pair, because the old pair I've been wearing for almost a year. I love slippers. That's it. I love slippers. If I become a CEO of, if my company, my startup ever succeeds, and we have some big skyscraper and we're in there, I'm going to be coming in with slippers and socks. It's just that simple. That's what we're going to do. Okay, cool. That's such an admit thing. Have to, bro. Rocking the white socks. Yes, of course. The black socks, but not white socks. They're Adidas. What brand? They are Adidas. All right. So that's pretty much it. I'm thinking of doing these market opens on Twitter as well. You guys think that would be a good idea? So Daily Palantir, we've got 4 Palantir videos coming up today. Okay. So the schedule for today is at 11:30. We've got some Peter Thiel Google stuff I want to talk about. At 3:30, we've got, let me actually just go to the thing on YouTube because I'm trying to remember this. At 3:30, we've got Palantir's relationship with one of the second largest sports on the planet, which is not football. It's cricket. So we're going to talk about that. At 3:15, 5:30, we're going to talk about Palantir controlling the nuclear codes. We'll talk about that. And then at 8:30, we're going to talk about someone who used Palantir and their experience implementing it into their company and if it was scary or not. And then at 9 p.m., 9:05 Eastern, we have Daily Palantir live stream, which will be live streamed also on Twitter. And I'm thinking of just doing the market open on Twitter as well and see what people do as well. So we're gonna do that. So we got a lot of videos coming out today. I know you guys won't be able to catch all of them, but if you do catch any of them, hopefully you enjoy the videos. Hope you enjoy the content. And at 9 p.m., I will see you guys to discuss the Daily Palantir news. And then we got Finance Junkies at 10 p.m. So then we got Finance Junkies at 10. Chris Patel says, dude's going to be single forever. Chris, actually, what I did? I'm going to give you guys a little bit of insight because you guys are here on the market open. I emailed a girl last night. Not DM'd. I emailed her. Okay. And if she responds, I will give you guys the update. But I DM'd her on Instagram and I was like, this is stupid. Like, does she have an email? I was like, oh, she has an email. And I think she should be relatively easily to get a hold of. She's not like a celebrity or anything. So I emailed her. So I'll let you know if that email turns into anything. And hopefully I won't be single forever if that email results in a girlfriend. DM'd and emailed in the same, bro. Well, DMs people don't even see DMs anymore. So I was like, you know what? Fuck it. Let's do the email game. Email game is crazy. Let's do the email game. That's it. So I'll give you guys updates on if anything happens with that email. But actually, she's actually a founder. She's in New York City. I wanted to connect with her because I also have a startup. She's building a startup in a really interesting spot. So I actually just really did want to connect with her and brainstorm some founder things because the founder life can be very lonely. So if you have some people who are also in that startup grind, it'll be super cool to connect. So that's why I emailed her. Okay, it's actually kind of reasonable versus not. Did you use spell check? No, I definitely did not use spell. I wrote that shit at 5 a.m. last night because I was busy. I was like, let me just get this email over with. So probably not. All right, that's it for me. Got a bunch of videos coming out today. I'll see you guys again at 9 p.m. And I think we'll do these market streams on Twitter. I think we'll literally just start live streaming them on Twitter. So for those who want to join on Twitter, it'll be live as an audio space. So you won't be able to see the charts or anything, but hopefully you'll still be able to enjoy the content. All right, that's it. Thank you all for being here. I'll see you guys later tonight. Have a great Wednesday, and let's kill it. Good night, everybody.